Ted, good to see you again. We have a really interesting one today for a lot of football fans, particularly those who are fans of Liverpool. I myself am not a football fan. I grew up playing rugby, so I never really got into football. But I know that you and your family watch quite a bit of football games. Is that correct?
I'm not actually that into football, but my two sons
Ah,
are, and yeah,
right.
we like to spend Saturday afternoon on the sofa, telling the manager and the players what I would do if I was paid £35,000 a day or whatever they're on these days.
Yeah, so this is going to be really interesting actually. And when I was looking around Liverpool, just an interesting fact that I found out is that their owners, let me see, one of their owners is well, the owner is Fenway Sports Group, and it turns out that LeBron James is a partner in that company. So he actually, in for all intents and purposes, owns Liverpool. So that I thought that was very interesting to hear. Um, Love to hear about their finances, Ted. What did you find out? I hear you found out something quite interesting.
Well, actually, this is a little bit of a historical analysis of Liverpool. And so, what we're going to do is to look at how Fenway Sports actually came to own Liverpool. So, we're going to turn back the clock a little bit and learn from the lessons of the past. I'm going to share with you, though, Moeed, my own personal favourite statistic about Liverpool. Can you tell me the name of the player who has scored the most number of goals against Liverpool? That's the name of the player who has scored the most number of goals against Liverpool. There's a deafening silence. There's no reason why you should know. His name is Emlyn Hughes. He was their fullback and he scored 26 own goals, which is my favourite piece of trivia about Liverpool.
That's so
Right.
funny. I was actually thinking, wouldn't it be funny if it was one of their own players? But I didn't want to sound silly and say so. But it turns out I could have been right.
Absolutely. Apparently, Jamie Carragher's second on the list on 14 own goals, but we won't
Wow.
go there. Okay, so we're going to take you on a little history trip, Moeed. We're going back in time, back to 2009. And here we have COP Football, which is the owner of Liverpool Football Club. And COP Football, for those of you who remember, was owned by Gillette and Hicks. So here we have on the directors, we have George Gillette, in fact, Foster Gillette and Thomas Hicks. So these are the guys who own the company. And what I find quite interesting, so here we have Thomas Hicks, George Gillette. They're the owners of the company at the time. And the company is really, really struggling. And we know the company is struggling because of the auditor's report. Now, usually in our analysis, Mo, we don't look at the auditor's report. The auditors just say, look, we checked the numbers, they look okay. Don't blame us if they're wrong, type of thing. But here we see a very interesting note in their accounts here, and it talks about emphasis of matter going concern. Now, we describe a company as a going concern, meaning it's trading and it is expected to continue to trade for the foreseeable future. So your normal companies, your Tesco's, your kind of Sainsbury's, BP's, Amazon, Facebook, these companies are what's called going concern. They are trading and they are expected to continue to trade for the foreseeable future. Now, the auditors here say, informing our opinion on the financial statements which is not qualified, they've considered the adequacy of the disclosure made in note 1. And effectively what's happening is that the company has £300 million worth of loans that they owe and they have to give back on the 3rd of March 2010. Okay, so they've got £300 million. It's a loan. They've got to give it back, and they've got to give it back on the 3rd of March 2010. Now, that's an interesting comment because you'll notice that this is actually dated the 26th of February 2010. Okay, so that's about 5 days. So they said they owe £300 million. They haven't got £300 million, and they got to give it back in 5 days. They go on to say that the directors, this bit here, the directors are actively in active negotiations to secure replacement finance. You remember we've looked at some companies where, in effect, rather than paying back their debt, they just refinance it. They go to one person and say, can I borrow the money in order to repay the loan over here? And the directors are saying, look, we're negotiating, we're pretty confident we're going to get it, so it's not a problem. But it says until this replacement finance can be secured, the group is dependent upon short-term facility extensions. These conditions, along with other matters, indicate the existence of a material uncertainty. This word material means very significant, which basically says which may cast doubt on the group and company's ability to continue as a going concern, which basically says if they can't find the replacement finance, they're going to go bust. Okay, so let's go and have a look at their accounts. So we're going to start off with the income statement. So we've got 3 columns on the income statement. So the first column is kind of without the player amortization. So player amortization, they buy players on a contract. So if you pay £5 million for a player and their contract is 5 years, you will put that player in your balance sheet as an asset, an intangible asset, and you will then amortize that player over the lifetime of the contract. So we depreciate tangible assets, we amortize intangible assets. Now, obviously, the players at football are intangible assets because they are untouchable. Well, no, that's not actually the reason, Moeed. It's because they don't own the player, they own the contract. So it's something you can't actually touch. So we're going to really focus on this column here, which is the kind of the total, and you'll notice that making turnover in 2009 of about 185 million pounds. We'll scroll down a little bit further to see how they're spending that money. So a little bit in terms of the cost of sales. So this will be the cost of running the ground. But really the big number is here, which is the costs of running Liverpool, which is basically player salary. So that'll be the significant number there. And you'll notice that after deducting all of their costs, they're down to a loss, an operating loss of about 15 million pounds. Okay. Now, on the 15 million pounds, they then have to deduct interest of 41 million pounds. So that 41 million pounds is effectively the cost, or the 40 million pounds, that's the cost of the debt, that 300 million. Okay, so if you're thinking about it from a traditional, when we looked at Thomas Cook a while ago, Thomas Cook was struggling to pay the interest. These guys are really struggling. They just don't have the money at all. Let's go and have a look at their balance sheet and see what's going on. So here is their balance sheet. So up at the top, we notice they've got the intangible assets. So there are the players. Just below that, we've got the tangible assets. So this will be things like the stadium and the training facilities, et cetera, et cetera. So they got about 300 million of players and training facilities. Their current assets, which is all of this stuff here together, is things like stock. So they've got about 4 million quid's worth of, I don't know, bobble hats and T-shirts. They've got some money due to them, and they've got about, they do have some money in the bank. They've got about 27 million pounds in the bank. And this all comes down to, so if we add these two numbers together, we end up with what's that? About 360 million pounds. So they've got assets of 360 million pounds. The liabilities that they owe and have to pay within a year are 472 million pounds. Okay, so that obviously includes the 300 million bank loan, but they've also got some other creditors in there as well. We could have a look at note 17. I don't think we really need to, because looking at those numbers, we're just thinking, you know, they are technically insolvent, and we can see that very clearly in their balance sheet, because if we scroll down to the bottom, we see their net liabilities. It's usually, we like to see a net assets there, where the assets are greater than the liabilities. Here we're looking at the net liabilities, so the liabilities are greater than the assets. So if you were to close Liverpool Football Club down, and you were to sell off the players and sell off the stadium and put them into liquidation, you'd find that you were 130 million pounds short. So it's a silly question, Moeed, but I'll ask it. If you were a bank and Liverpool came to you with this set of figures and said, we need to borrow 300 million, what would you say?
Yeah, no.
No, exactly. Absolutely not. And so in effect, what happens now is that Liverpool are put into administration. Okay. Now, administration, liquidation. Liquidation is where we sell off the assets. We take the players, we sell them, we pay off, we sell off the stadium, etc., etc. We sell the t-shirts and the bobble hats. But Liverpool is worth more as a going concern. It's worth more as a football club than it does on a breakup basis, because there's lots of very dedicated, nutty fans. I came across one of them who lived in Qatar. He told me proudly that he was a season ticket holder. Cost him, I don't know, 600 quid a year. I said, why would you be a season ticket holder? You live in Qatar, you never get to the games. He said, oh yes, but if I give up my season ticket, I'll never get it back again, because there's a big waiting list. You know why there's a big waiting list? Because people like him live in Qatar and refuse to give it up. But hey, don't get me started on this one. There's a lot of very, very dedicated fans out there. And so Liverpool is worth more as a going concern. So the people who are owed the money, that's the bank, effectively they replace the directors and they take ownership of the business, and they look around for a buyer. And as you mentioned, they find Fenway Sports. Now, Fenway Sports is owned by Henry out in America, and he owns the Boston Red Sox. So I reckon the conversation goes something like this. Hello, Mr. Henry. Do you own the Boston Red Sox? Do they have Red Sox? We have a football team here with Red Sox. We reckon there's a synergy here. Would you like to buy Liverpool? And he says, yes, he would. So in effect, what happens is that Henry and Fenway Sports take ownership of Liverpool Football Club. So here's the announcement. It's made in 2010, and it was the New England Sports Ventures, owner of the Boston Red Sox. They ultimately took ownership, and this is owned by, as I said, Henry. Gillette and Hicks, they were very unhappy. They felt that they didn't get the sort of the value that they wanted out of the deal. This was very much a leverage bet. Manchester United, another example of a football club who's experienced the same type of thing with the Glazier brothers, loading the company up with debt and then using that debt effectively to buy the company and hopefully to try and turn a fast buck. We're seeing a lot of football clubs now which are backed by Russians or Middle Eastern, so there's a lot more money coming in and less of this debt structuring. Anyway, so these guys end up with the Liverpool, and a little bit later on we find, so here's the 2017-18, Liverpool broke the record. So fast forward 7 or 8 years, Liverpool break the record for a pre-tax profit made by a club, and they the profit after tax was 106 million pounds. So clearly they've managed to turn this club around to qualify for Champions Leagues and UEFA Cups and whatever else it is that they need to do, and get all the TV rights going, etc., etc., etc. So if we look at where Liverpool Club are right now, so this is the latest set of accounts for 2019. So this is pre-pandemic, by the way. Liverpool Football Club and Athletic Grounds is the name of the company now that owns Liverpool. Obviously, it's not the ultimate parent company, as we talked about. And if we look at the accounts, there's no qualification in the audit report signed off by Ernst & Young. Very good, solid, high quality bunch of auditors. And here we see the sales have gone up a little bit, but down the bottom line. So there's the 106 million of profit that they were reporting in 2018. There it is. It's a little bit down this year. It's only 33 million. And the main reason for the 106 million is that they made a massive profit on sale of players. So, they'll have, they've had some very, very good players. As I said, I don't really follow Liverpool, so I don't know exactly who the names are, but no doubt there'll be a lot of people watching this going, I know exactly who it was and who they were sold to and for how much, etc. But they made a big profit on their players, and they've made a profit again. So that's maybe a reflection of maybe the Liverpool Football Academy bringing in some good players and then selling them on. Football's academy, they only cost about £2 million a year to run, so there actually can be potentially a very lucrative gold mine, and of course the kids love it. Very good for grassroots football, etc., etc. So there you have, in a nutshell, what's happened to Liverpool from 2009 when they wobbled and went bust, all the way up to 2018 when they became the most profitable, if not the most successful football club in the country.
Pretty good, pretty good. And yeah, what does everyone else think? It's a shame we don't have later financial statements after the COVID, but that's going to be pretty interesting. So I think when that's released, we should probably do another one to see how they fared through the pandemic. But what do you all think, right? Are there any diehard Liverpool fans out there that want to comment on this? And if there are any other fans of other football clubs and you would like us to look at their finances, drop us a note in the comment section. We would love to do that. As usual, like, share, subscribe, and we'll see you on the next video. Thank you again, Ted.
Excellent. Good to speak to you, Moeed. Catch you later.